G'day folks, welcome back to the post-weekend review of natural gas. I'm going to be covering just the commodity price today. It's a quick video. I'm not covering the ETFs. The ETFs charting patterns are pretty much the same as what I'm going to show you for the natural gas commodity price. Now the trend is continuing in a bearish momentum, so just be aware of that, avoid going long at the moment, and we're going to be including some back testing results to show the short side as well. Before I go any further, make sure you hit that like and subscribe button to support the channel. So first we start at the long-term trends. You can see here on the monthly, it's still bullish on the monthly. Both the CCI and the price have broken above the moving averages. The weekly likewise has been bullish for some time, but notice it's actually pulling back towards that moving average range this week so far. So possibly about to break into that range. So that's a slight bearish move, even though the weekly is still bullish. But on the daily, you'll notice here it's actually broken below the moving averages of both the price and the CCI moving averages. So again, predominantly bearish trades if you're trading on the smaller time frames, like the 1 hour or the intraday time frames. Now if we go to the 1 hour time frame here, I've got the daily here as a reference. You'll notice first off, I've got these diagonal trend lines on the daily, and you can see there it's just actually approaching that diagonal trend line on the daily, and also on the 1 hour time frame, you see that support line at 39.45 has been broken. With those couple of candles so far of the first couple of hours of trade this morning, post-weekend, it's broken below that trend line. You'll notice the CCI on the 1 hour time frame is also broken below. Before our last video, it was sort of hovering up within that moving average range, so wasn't quite sure which way I was going to go, but this is confirming it's broken to the downside. So predominantly short trades to be taken on the 1 hour or intraday time frames only. And what we have here is the back testing going short only. So I've got here on the back testing for the stop loss approach and also the average down approach, and stay to the end of the video. I'll show you the trading parameters to enter in both of those. But according to this back testing, it started when the CCI broke below that moving average range, and that price was well into that moving average range of the price chart, and that actually continues in a downtrend. So that's where we start the back testing, from that daily point on the 1 hour time frame. So you can see here on the stop loss approach, the total gain so far has been 2,030 if you're trading the natural gas $10 contract, and on the average down approach it's generated 9,400. And you can see there where it's averaged down on each of those points. So again, similar to the daily approach, we only go short when the CCI and the price have broken below the moving average range. We avoid going short when the price and the CCI are above the moving averages, with the exception of the average down approach. So long as that daily is in a downtrend, we still follow that approach. So as soon as that breaks into that moving average range on the daily, we close out all positions. So here are the back testing or trading parameters. So if you're trading on the 1 hour time frame, you invest per trade one contract, the first contract entered, and you average down limit of 15 contracts. So basically the contract entries, the first one is one contract. Next lot is 3. You've got a total of 3 contracts now running. Add another 4, you've got a contract, 7 contracts running. Add another 8, and then you've got a final of 15 contracts maxed. And every time you average down, you make sure it drops by at least 0.005% for a 1 hour trade or contract parameter. If you're trading on the daily, the average down is 5% decline. Now, trading shares is very similar. Invest per trade $1,000 per trade. So you invest first $1,000. Next lot is $3,000, next is $7,000, and finally you've got the max of $15,000. And again, average down by 5% if you're trading on the daily time frame, and take profit of 3%. If you want to follow the traditional stop loss strategy for trading CFDs on the 1 hour time frame, you invest one contract per trade, take profit of 0.003% or 3% for a daily trade if you're trading on the daily time frame. And a stop loss is when the CCI 150 turns into the moving averages. Likewise, if you're trading shares, if you're trading on the daily time frame, invest per trade $1,000, take profit is 3%, and again, stop loss when the CCI 150 turns into the moving averages. Obviously, you can invest more than $1,000 in any of these trades, but you've got to be very careful of the your money management and your account balance. And I've limited it to 3% take profit on the daily and 0.003, the equivalent for the 1 hour time frame, because I found if you make it too high, in other words, if you aim for a 5 or a 10% gain, often you're a lot longer in the trade than you really expected, and it just gives you a lot more turnover when you're the smaller take profit return. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.